A huge number of investors are selling off their Bitcoins. Do you want to know why I'm not one of them? Let's get started. Welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and a selected altcoin. We meet and take a look at the charts now not from three, but from four different perspectives: technical, on-chain, fire charts, and pay attention from the AI perspective, which is something we haven't offered here before. This means that the level of condensed analytical knowledge we have here is absolutely unmatched anywhere else on the internet. You appreciate this because our subscriber count keeps going up. We're already fighting for 53,000, but I know that not everyone who watches these videos is subscribed. So if you're new here, make sure to subscribe, and if you're not, leave a like, a comment, ring the bell, whatever you want. And remember, what's included in this video is not investment advice. For advice, consult a licensed advisor or just do your own research, which I'll be encouraging you to do with a contest I'll talk about, as usual, at the end of this video. If you're aware of that and ready for the analysis, grab your coffee and let's get started. To start off, as usual, we're putting Bitcoin on the table, and here there's some debate about whether we're dealing with a symmetrical triangle or a bull flag. Personally, at this point, it doesn't matter to me in the slightest because the breakout hasn't happened yet, and once it does, based on the exact pattern we have, we'll be able to determine the price target. We'll definitely come back to that, but for now, let's focus on what we can actually see on the chart. A triangle. At least that's what I call it, because we have a downward trend line up here, and we have an upward trend line down below, and this is a narrowing of a certain price action that we can confirm with volume. If we look at the volumes are actually in a downward trend right now, which confirms our consolidation and the wait for an impulse for a bigger breakout. Let's check another exchange. Here too, the volumes are declining, and on yet another exchange, it's a bit less pronounced, but the volumes are still consistently dropping. As a result, we're dealing with a consolidation, which in a way we could say we expected, because a week ago I mentioned that there was a likelihood that a symmetrical triangle would form on this chart. I was expecting a drop to around $102,000. Meanwhile, on Friday of last week, the price dropped to around $102,800, so not far. I wouldn't be surprised at all, and I'm prepared for such a scenario. If this triangle widens and takes on a more symmetrical shape, that would be perfectly fine. Could there be deeper drops? Of course, there could. We have a very dynamic geopolitical situation that affects the world markets, the global markets, especially assets like cryptocurrencies. So if the price of Bitcoin in a single trading session, as I mentioned earlier, happens to close 3% below our support level, in this case, our upward trend line, then for me personally, that will be a clear signal that the declines could indeed go a bit deeper and perhaps even lead to valuations around 93, or in this case up to $97,000, because in this area here we observed a broader consolidation and a noticeably higher volume of trading activity. Overall, usually such areas act as support, so we need to be prepared for exactly this kind of scenario. Let's also check the indicators to see how they currently look. We can see the RSI, which is having trouble holding the 50 level. Yesterday, on Tuesday, this area was literally broken. And right now, at this very moment, there's a battle going on to reclaim this area, so that's a bit of a worrying sign. Let's also take a look at the MACD. The MACD is also showing a bearish signal. The histogram is clearly red, but let's remember that the MACD is a lagging indicator, so here I would be looking for a reversal point, like the ones we saw here or here, where we basically started to gain bullish momentum. So if the histogram stays red but turns a lighter shade, that will be a sign that a reversal is probably happening. It's worth noting that here we had a false signal, but the bulls still showed a willingness to reverse this local trend. When dealing with this kind of consolidation, it's also worth looking at historical volatility, and right now, historical volatility is hovering around 35. And as we know, every time it dropped to around 20 or even below, here, for example, just a few days earlier, we saw a case where it fell below 20 with the indicator showing 17.5. There was always a rebound afterward. These rebounds are often very dynamic during consolidation phases. So here I would expect that our historical volatility will not only drop below 20, but might even dive much deeper. We also know that the deeper it dives, the stronger the breakouts tend to be, so that's what I would expect here. If we have this kind of consolidation, for me personally, it's a very bullish signal because the pattern itself is primarily bullish. Regardless of whether we see short-term fluctuations or even breakouts from this pattern, the overall structure will still remain bullish, since this triangle could very likely turn into a descending channel, which can also indicate a potential breakout to the upside later on. The situation doesn't look quite as rosy on the weekly chart. It's worth taking a look at what it showed at the weekly close, which we observed on Monday. Well, Bitcoin dropped by 0.2%, forming a candle that's quite similar to the Dragonfly Doji we saw the previous week. But two such candles appearing one after another isn't exactly a positive signal, but it's not entirely negative either. It mainly indicates uncertainty. In any case, there are negative signals that are currently gaining a bit more strength. So we have a discrepancy between what's happening with the price and what's happening with the RSI indicator. It's not a typical divergence, it's not a classic bearish divergence, but it is definitely a bearish discrepancy in terms of momentum itself. Why isn't this a typical divergence? Because it extends over a period longer than 14 weeks. It's worth mentioning, however, that we saw exactly this kind of situation between the peaks in 2021, when Bitcoin reached its first peak in April and the second in November. A very similar discrepancy occurred back then. And here we also have the MACD. The MACD is weakening, and we can see on the histogram that unfortunately it keeps moving downward. This momentum isn't strong, but that's how it is. So we have to keep in mind that bearish elements, bearish indicators are also appearing, and they could result in Bitcoin technically dropping to around $97,000, $93,000, if only to reset these indicators. The awakening of retail investors, or at least that's what we can say when looking at Bitcoin through the lens of CVD. More on that in a moment. First, let's check where the key support and resistance levels are for the current situation on the chart. Let me remind you that the blue line in this case represents the price of Bitcoin. The cross lines, the horizontal lines, these are basically volume lines located at specific price levels, which correspond to selling. If they are above our blue line, they indicate selling, or if they are below the blue line, they indicate buying pressure. And we can see very clearly that there is quite a strong demand starting around the $100,000 mark. Here, we have volumes of nearly $15,000 in orders waiting to buy Bitcoin in these areas if the price fluctuates and drops. And we also have quite large volumes around the $102,000 mark, where they exceed $10 million. Well, 102,000, that's the area we were talking about. As we can see, we're not the only ones watching it. Besides that, it's worth noting that for the past few hours, some interesting support has been appearing around the $104,000 to $105,000 level, just below $105,000, where orders are currently being placed to push the price up. As for the sales volumes, well, they do not change compared to last week from 110 to 120. They are distributed very regularly. However, there's been one additional buildup, which in this case is at the $109,000 level. It has a volume of just under $11 million in Bitcoin, waiting to be dumped on the market if the price reaches $109,000. And here we can see the CVD, which is our orange line representing retail investors. In this case, retail investors who are currently in an upward trend, so they're buying Bitcoin. Whales have been a bit more dormant lately, but they're also starting to take the initiative. The purple wallets, which very often followed the whales, have currently pulled out of the market, so we can see that the market is being driven by the smallest and the largest players. So why am I not selling my Bitcoin when the technical charts basically aren't showing me anything positive? Well, technical charts very often talk about short-term price action, or let's say what's going to happen in the next 2 or 3 weeks. However, I'm also looking at the long-term perspective. On-chain data doesn't indicate that the cycle is actually coming to an end. Besides, well, we believe in cycles and we see confirmation of that. After all, cyclicality is also a technical factor, which really shows us that Bitcoin could go much, much higher, and the fact that it's summer doesn't necessarily mean we'll see big drops. For example, in 2020, the real bull market started exactly in mid-July, and the data supports that as well. These are data that I've already mentioned in materials on Kanga Trends and Kanga Insights. It's also worth remembering that everyone manages their risk in their own way. So if someone is selling off their assets right now because they feel they don't want to take on more risk, that's absolutely fine. I'm willing to take on more risk, which is why I'm staying in the market. Seeing the hard data, I want to stay in at least until the end of the cycle, and maybe even a bit longer, because this cycle might last a little longer. So if you want to manage your own risk in any way, but you're not quite sure how to do it, check out Kanga University. We've pinned the appropriate link in the description of this video, which talks about the risk to potential reward ratio. So be sure to check it out if you're interested in this topic. Today, we'll keep it brief about Ethereum. Why? Because from a technical standpoint, relatively little has changed. We talked here about a certain ascending triangle that appeared on the chart, where we had a clear resistance zone that formed one side of the triangle, and we discussed the upward trend line that was forming here. Well, that upward trend line has been broken, and now we would have to adjust it a bit. I'm not convinced that we can still say this is going to be an ascending triangle. However, it's worth remembering that this upward trend line will definitely serve as a line from which the price can bounce, because we've already seen 3 or even 4 touches of the price in this area, so these are good opportunities to buy Ethereum here in case of any potential drops. And currently, if such a drop were to happen today, the upward trend line is located approximately around, at least at today's point in time, around 2,440, so for me personally, that's quite an interesting buying level. Nevertheless, I keep emphasizing that it's also worth watching the lower level around 2,330 in this case, which is roughly here in this zone. Let's make this line a bit clearer so it's more visible, since one of the bounces also happened here, and the price could indeed move toward these areas, consolidating in the form of more of a rectangle in this case. We mentioned that a rejection could occur from this gray box, because such rejections have already happened here historically. As we can see, we have multiple confirmations, so technical analysis definitely works. But even so, Ethereum remains strong and gives hope that a breakout could happen here, especially if things stay relatively calm geopolitically and Bitcoin at least maintains stable price levels. It's also worth taking a look at the RSI. On the RSI, we can see that Ethereum is also struggling with the 50 level. This is a key area for maintaining the current price action. If it doesn't hold, then as I mentioned, 2,330 is the area where I personally will be looking for an opportunity to buy Ethereum. On the fire charts for Ethereum, we can see slightly higher activity than what we see with Bitcoin. However, let's start with the orders themselves. And we can already see the first buy orders placed around 2,440, which is right at our upward trend line. And the sell orders are around 2,600, which is just below our supply zone. Who's buying? Well, in this case, we can see that retail investors are on fire again, and this is really a very strong move. It's similar with the whales and the green wallets, which at this point represent holders with between $1,000 and $10,000 waiting to actually buy Ethereum. So in the case of Ethereum, it even looks better than it does for Bitcoin. Today's altcoin is Link. Link, which we can also discuss very briefly, because structurally it looks very impressive. We see a clear and consistent downward trend line on Link, and we also see a significant demand zone that we marked a very, very long time ago, from which Link has bounced multiple times. I expect that the dip into this zone here might be a bit deeper than before, because at the same time on the RSI we can see that the indicator is currently in the bearish zone. But it also has a lot of potential, and I'm even quite certain that if a drop occurs here, a bullish RSI divergence will be formed. Let me show you how it currently looks. Here, the indicator is moving upward. I'll highlight it in yellow so we can clearly see it. And here, for now, we have a flattening, right? Well, maybe slightly upward. A flattening is also already a divergence. However, when the price drops lower, we'll experience a divergence where the lows move in the opposite direction compared to the price lows, at least compared to the indicator's lows, which can potentially push the price up. If that doesn't happen, then I would expect to see buying around the $10 mark. Let's say these are areas from $10 to exactly $11, where you can catch some lucky opportunities, and I will definitely be placing some buy orders there. However, I'm not entirely convinced that the price will actually reach that specific level. If there are bigger, more significant fluctuations in the market, then there's definitely a chance for that to happen, but overall, I expect that a real substantial rebound for Link will actually occur from this gray zone area, and that could potentially push the price much higher, well above the areas where Link is currently trading at the moment. Well, the first resistance I see here is primarily the downward trend line, but once that's broken, values like 15, just under 16, $15.50 per Link, in my opinion, are completely attainable. These price levels are confirmed by the fire charts for Link, because the first supply zone I see here is exactly at 15 and just under $15.50, where there are $500,000 worth of Link waiting to be dumped on the market once that price is reached. We can also see that Link has some support, which is literally being used right now because it's around $12.8, and we have very similar buying volumes here. Later on, if there were to be any bigger fluctuations, stronger support appears around $10.50, and we were just moving around that area a moment ago, $10.50. So these are exactly the zones, those wicks we were talking about here. But as I mentioned earlier, I would expect these to be more like lucky hits rather than places where the price will actually go. However, looking at it through the lens of CVD, right now this market is pretty flat. It's more in a waiting mode than in action. And if you'd like me to analyze your altcoin, remember, it's a very simple thing to do. All you need to do is register on Kanga. The registration link is in the description of this video. Check out the cryptocurrencies we have and pick the one that suits you best. Maybe it's the one you're simply holding in your wallet. And just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be any meme coin. And third, it can't be KNG. So you know what to do. Let me know in the comments which crypto you'd like to see in the next video. 3 altcoin setups from Kanga that are recognized by AI. Right now, we have cryptocurrencies like Immutable X, Synthetix, and Dash, and all of them are currently in descending channels that were identified just a few days ago. Immutable was identified 4 days ago, and the other 2 cryptocurrencies 5 days ago. Both, or actually all 3 in this case, have downward potential. The first, Immutable, just under 9%, SNX, nearly 22%, and Dash, about 5%. So according to AI, at least, these cryptocurrencies could experience even greater selling pressure in the next few days. This is a good opportunity to go short. Why am I talking about shorting? Well, because leverage on Kanga is getting closer and closer. So I'm already equipped with the tools to trade with leverage. I hope you are too. We will definitely discuss such cryptocurrencies and setups in the future once leverage becomes available. Bitcoin ETFs are one of the factors that reinforce my bullish conviction that the bull market isn't over yet. Let's take a look at the chart, and honestly, there's not much more that needs to be said. Despite what's happening in geopolitics, despite the uncertainty we see on the chart, despite those candlesticks that are appearing on the weekly chart, which also indicate this, we can see that ETFs are still buying, and this is 7 days in a row now where the volumes are really not low. At the same time, we absolutely don't see any selling volumes, at least over the past 7 days. So this is very bullish here. Time for some on-chain analysis. And today we won't be talking about critical deviation indicators, but rather about those that will simply bring us a bit of peace of mind regarding what we're currently seeing in the market. So let's start with stablecoins in circulation, which, as we can see on this big chart, are basically increasing all the time. I'll narrow it down a bit. Let me remind you once again that the orange line represents the indicator, while the gray line shows the price of Bitcoin, and we can see that the number of stablecoins on the market is constantly increasing, which means that purchasing power keeps growing. And if purchasing power is increasing, then let's check who's buying, who's selling, and whether there are any significant movements happening here at all. Let's check the balance on wallets that hold at least any amount of Satoshi, and we can see that for many months now, it's been completely flat. So from this perspective, not much is changing. We can observe a slight upward trend, showing that retail investors are indeed buying more Bitcoin, growing wealthier, and expanding their investment portfolios, but it's definitely not a dynamic movement. When it comes to holders of 1 Bitcoin or more, here we see the opposite trend, a slight decline. So we can't say that the situation is exactly the same as what we saw in the previous chart we just looked at. Nevertheless, it's still an area I would call consolidation, where nothing major is happening yet. We're not seeing any large sell-offs. When it comes to wallets with an address holding at least 1,000 Bitcoins or more, in the longer term, we've seen a tendency for everything to stay at similar levels for many months. However, the last few days have brought a bit of pessimism, because we can see that there have been some sell-offs. Sell-offs that have resulted in there being 2,091 such wallets at the moment, whereas just a few days ago, basically on June 15th, we observed 2,094 of them, so basically 3 have disappeared. Is that a lot or a little? Well, if we look a bit further back, maybe to the very beginning of June, at the peak we saw here on June 5th, there were 2,103 of them, so now there are 12 fewer. 12 fewer. Is that a lot or a little? I don't think that's a lot because, as I said, these are very large wallets, so it's worth looking at this chart from a broader perspective, and in this case, we can see that what's happening here is just a regular consolidation. And what about wallets holding 10,000 Bitcoins or more? Here we can see some slight buying. The whales are buying, but just as we didn't worry about this when the prices were dropping, we shouldn't pay too much attention to it now either. Nevertheless, it is still bullish or positive. However, let's not get overly optimistic about what we see on this chart in terms of what might happen next. In any case, for now, what we can take away from all these charts is that, contrary to appearances, the market is actually very calm. And now the Bitcoin balance on exchanges, which is the last on-chain metric I want to mention today. We can see that there's been a breakout below the areas we've been watching for a long time, for many months, as support. A breakout to the downside, which means that Bitcoin is leaving the exchanges. Well, the last day basically caused a slight increase, but we're still hovering well below the lows we saw before. And I have to admit, this is a multi-year low, because the last time Bitcoin was at these levels was basically in December 2020. So from this perspective, fear simply creates good buying opportunities, and so far the market is taking advantage of them. It's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or Chainlink. Present your analysis from a technical perspective, on-chain, fire chart sentiment, fundamentals, whatever you like, and remember, you don't have to agree with me. The author of the most interesting comment, the most interesting analysis, will win 20 KNG from me. And the winner for the previous episode is Chodler21, who analyzed Bitcoin. Congratulations. Please contact support now to claim your prize. And that's all for today. If you enjoyed this and you're not subscribed to the channel yet, make sure to hit that subscribe button and join me here next week. I'd also really appreciate a thumbs up and a comment. And please rate this episode on a scale from 1 to 407, where 1 means it was weak, bland, and you don't want to see more, and 407 means it was fantastic and you want more of this. And if you do want more, you know the drill. See you next Wednesday. Bye.